Hi everybody, it's Peter Arguelles. Regarding the IUL, people sometimes want to burn the candle at both ends. They want to have a high death benefit and they also want to have high cash growth, but it just doesn't work that way. It's really important that when your IUL is set up, it's set up properly. Now, I always say the IUL is a Swiss Army knife of insurance. You can do so many things with it. We can protect you while you're alive. We can protect your family after you're gone. We can build up money that you can use for investment and retirement fund as well. But none of that's going to happen unless you minimize the death benefit. Sometimes it's going to be lower than what you think you need, and it might be lower than what you do need. Well, if you want a high death benefit for a limited period of time, maybe until your kids are in college or something like that, put your money into an IUL for the cash growth, but put your money into a whole life policy or a term policy, whatever is the most logical thing for you to have based on your circumstance. Of course, a qualified, licensed fiduciary insurance agent can help you determine all that. What I'm trying to say is that when you do set up your IUL or you have an agent set it up for you, you want to make sure that the death benefit is the minimum it can be for the amount of money that you can afford to consistently put into the policy. By doing that, you're going to see the highest cash growth and the most benefit from the IUL policy. Well, the illustration, it shows a flat percentage that's based on an average. It's not a fixed rate. It's based on a fluctuating index. So some years it can do fantastically well, but other years the stock market might go down and it doesn't do as well. Or if the stock market goes negative, luckily with the IUL, it stays at zero. You don't lose any principal. But here's the problem. If you're not funding enough cash, too much of your money that you pay each month goes into the death benefit. Then it can eat into your principal, and you can end up having what I call a snake eating its own tail, where your IUL doesn't last until maturity or until 120 years. You need it to last all the way because you don't know how long you're going to live, and most people are going to live longer than they think. That's why you need the IUL for your later years and your cash growth. So bottom line is, make sure that when you get your IUL, it's a minimum death benefit. And it may not look like a lot, but that's not how you judge an IUL. You judge it by how much money you're going to make on the cash portion of the payment, not how much death benefit your heirs are going to make if you die. Thanks for listening.